is Agriculture Today. We are back now with Dan O'Brien. He is our K-State grain market economist. And as always, he's joining us for our weekly grain market update. So Dan, thanks for joining us.
Thank you, Samantha.
Absolutely. So it's been a busy week this past week. We've got a lot we're going to cover, especially in terms of obviously here in the US in terms of the grain market, but big shifts in the grain basis because of that.
Yes, we started the week with that USDA WASDE crop production WASDE report, and there were surprises in that. Generally, again, corn production number that came in with a yield of 172.5 bushels per acre and a below 14 billion bushel crop, and that just, if anything, exacerbated, made more frontal the drought issues that we've had here in the Western Corn Belt, and made all that much more stressful the tightness that we're seeing in supply demand, and led to high strong basis levels, especially for corn out here in the West. Just quite the situation. In our reports that you and I talk about all through the week. On these weeks, we look at futures price trends and across these commodities for corn, these corn futures, November soybean futures, even for wheat, we have at least moderate, if not strong, uptrends on the futures, much less what's happening on the basis side. So quite the situation. If you want me to go into it, I'll take a look at let's take a look at corn basis in particular. That's really the thing we're most attuned to. You look at as of closes on Thursday, the 15th of September, we had a basis of $1.36 over D's futures in Garden City. Of course, that's a demand center for livestock feeding, some ethanol plants down in there at times when you have excess grain, an export source as well, but especially livestock feeding going on. So $1.36 in Hutchinson, over $1.01 over, 90 cents over in Salina, 90 and in Colby, 81 over in Columbus. So strong basis levels. And we've had public meetings, talked with people, and conversations. The bids we're seeing here are the grain elevator bids, and with some, when we get to new crop bids on, if you look at our information, there's some ethanol plant bids for next year that come in. But what really is, I guess, attention grabbing are some of the bids we don't normally follow. The bids at livestock feeders, at some pork feeders out here in the western part of the state. Reported numbers of bids from cattle feedlots that are at this 136 or much stronger even. Those bids are aimed at probably trying to get in front of supply questions about bringing grain in from the eastern and central Corn Belt. So we have reports of train loads committed or coming or been here of corn out of those areas, and have even had reports from the eastern and central Corn Belt about and talking with my colleagues there, wondering how come their base is so strong. Well, the answer to the question is that, hey, we're coming to buy your corn because we're short. We really are short. One other point to bring up, a long time strong basis area of this Western Corn Belt has been down at around Hereford, Texas, Friona, some of those communities, and they just start out with the presumption that they're short corn, that they've got to bring stuff in. So those bids have been pretty strong train bids, is my understanding. Well, now as we've looked at our bids here in Western Kansas relative to that area, that's been a grain bid leader in the Western Corn Belt for a good number of years. Now our bids are essentially equal with theirs. So that's indicating with our drought that we've had here, we are deficit. I think the way I would think this could unfold is that, we do have some corn. We've had, thankfully we have, not every place is in terrible shape. We have some dry land corn, although a lot of it's very, very damaged. or some of it's abandoned. On the irrigated side, we've had some success. We hear the heat that came in July affected that too, but we will have corn coming in at harvest, and whatever is loose for sale, that'll be brought in. You know, that'll help the situation for sure. My concern would be, again, once those supplies are used up with cattle or hogs in in the feedlot, or ethanol plants using them, then we'll be reliant especially on imported grain. And so we always bring in grain to some degree in this area, but there'll be a real strong motivation to bring all that much more in. So I guess if someone asks what's the impact of the drought of 2022 upon us, well, it's left us really deficit in terms of supplies for grain, and we've seen that express itself in very, very strong basis levels, especially for corn, and it's really set us up for a time of real, I guess you could call it, scrambling for supplies to keep these enterprises going out here in the West as we move not through just these first 4, 5, 6 months of this marketing. You're starting September 1, but my concern is on the backside of that. How do we keep these enterprises going, and what profitability will livestock feeders have given high priced corn that they've got to work with? So again, we'll be thankful for the supplies that come up front from what we harvest, but what happens on the backside, that's where my concerns lie.
Absolutely. Yeah. And I know you've put together some estimates and probabilities of different price outcomes that we might be seeing. So let's go ahead and talk about those while we're thinking future wise, what we might be seeing here to come.
Here, my office is actually in Western Kansas, and there's a bias, they call it a confirmation bias, to where you tend to see information that agrees with your presumption. I look out my window and it's pretty dry. Haven't had great crops. So my perspective on where the corn market's going, yeah, I think is probably affected by that. I'm in terms of prices, pretty optimistic for where prices could go. I think we'll hold up strong until we get some evidence out in 2023 that we're going to have a drought again. So on these scenarios, you've got let's say that the USDA is right, and probably 50-60% chance that they're correct in what they have. This is based on updated September numbers, and then from there, their projection was for the USDA at 675. I think I've got projections at 690, and then if things get even tighter later on, if the USDA comes in the October report or the November report and shaves even more off that production number, then boy, we get tight, and then we're at $7 or above, and it's just a matter of what we have to bid to get supplies in. So quite the situation coming, I would think.
Absolutely. Yeah. Obviously, corn, not the only market that's been having really strong prices here lately. Soybeans, another market that we're obviously worried about what crop wise we're going to actually have come out. But harvest coming up soon for that as well.
Harvest coming up for soybeans. Again, that's not so much a Western Kansas issue, although we certainly have bids at major markets, Colby and Garden City, et cetera. But been some crop in Kansas. The dry weather has likely affected us some in central part of the state. Generally, coming out of that USDA report, there was a cutback in overall production, I think down to 50.5, 50.4 bushels per acre. And that was a surprise to the market. There was an expectation that, hey, it's 51.5, 51.9, no problem. Well, the dry conditions even affected the central and east parts of the eastern central corn belt. So things have tightened up with that regard. We've tightened up stocks some. You see cash prices now for soybeans running really quite a lot of variability. It's surprising when you look across the state at Topeka, Hutchinson, Columbus, those eastern locations. You're over $15 for cash bids, and you look twice to wonder if that's right. Again, a positive basis for soybeans of 81 cents in Topeka, Hutchinson 50 over, Columbus in the Columbus area, one location, 1566 of $1.15 over. So just amazing strength. And in looking at basis bids for soybeans, it's whereas corn's jumped up and really strong basis. And again, we rolled contracts and things that's affected that some, but jumped up, came back down a little bit. And now it's trending higher in some of these locations. On soybeans, where you really see the jumps happening again, Topeka, Hutchinson, Columbus, just a lot of strength, and not just a slight trend up, just a shot up, really strong basis levels. So when I see things like that, moves like that, you've got to wonder about export demand, or being near a plant's worried about getting supplies. And so that, I guess, those type of really volatile movements are just endemic of the type of year we have, where we've had this drought in parts of the country and we're anticipating short supplies, and buyers are scrambling to get hold of what supplies of these crops that they can.
Absolutely. Yeah. So we've wrapped up soybeans and corn, our discussion here today, but let's get into wheat. We've got some really bullish and strong market export reports specifically here.
Yeah. Even though yesterday the futures were just so for hard red winter wheat down 23 cents, actually the numbers that came out on exports for the week ending September 8th, by the way, that USDA numbers finally have come out after a glitch they had in their system. They weren't available for 4 weeks. Well, they came out for the September 8th figures. And that was on yesterday morning, and showed that for the week ending again, September 8th, we had 24, almost 25 million bushels of all wheat in the U.S. exported. We need about 16 and a half to meet the USDA's projections. So that we haven't seen that for a good long time. Hard red, what we grow, we had exports of about 7.2 million bushels. Need a pace of about 4.8, 4.9 to meet the USDA's projections. For hard red spring, 12 million bushels it exported. Actually shipped in that week. We need about 4.6 to meet the USDA's projections. So that happened in spite of the high U.S. dollar, and so there must be buyers across the world looking to get hold of what grain they can, and we had a particularly good week in the wheat market. And as we talked about, the wheat futures, which tend to be so flat during this time frame, they're actually trending up. So I guess it makes our friends in the wheat market, in the wheat industry, happy to see that. Really, but the question in front of us is acreage. What are we going to plant? We're about at the end of the production cycle for corn, sorghum, and soybeans, sunflowers, cotton, etc. We're just starting over for wheat, and starting in a dry situation. So we'll see what happens. Last comment I'd say on wheat is that if we maintain high crop insurance prices, that will not be a deterrent to people planting wheat as they look to manage cash flows and protect their farm income in the coming years. So even though we're dry, we'll see if the high insurance prices tend to encourage planting of hard red winter wheat anyway.
Sure. Yeah. Weird situation that we're in right now. We've got really strong prices, bullish prices, honestly, like textbook definition. And then obviously the crop insurance issues at hand. But that drought is really just what's holding people back. And I guess we'll talk about that more to come. I'm hoping to have a few guests on to answer some questions in the week ahead about that, addressing concerns over that. But percentage of our state that hard red winter wheat is actually planted in. I know that you have percentages showing the drought numbers in those areas. Is that correct?
Yeah. Well, for Kansas, we have 87% of the wheat in the state of Kansas, wheat acreage state of Kansas, located in drought areas, and 37% in extreme drought, 28% still bad drought, but not quite as bad. Another 6% pretty bad, not very good, 17% dry. So we only have 13% that's out of the woods in terms of dry conditions. So and it's far worse out to the west. You can northwest, southwest, just tough areas. And back behind it all, we've got the ongoing La Nina weather pattern that I'm sure Jeff Whitworth in our shop talks about, and if that would break, it would be a great thing for prospects going into 2023.
Absolutely. Yeah. That lucky 13%. Here's cheering them on as we go on. And
Right.
here's hoping for precipitation for the rest of those individuals, obviously located across the state. But Dan, thank you so much for your insight as always. So, you provide so much valuable information for our listeners, and we really do appreciate it.
Well, thank you, Samantha. I look forward to helping out.
Absolutely. Once again, that was Dan O'Brien. He is our grain market economist here at K-State, sharing with us information for our weekly grain market update. We'll be back with more ahead on Agriculture Today.